Hi and welcome to a new video. In this video, we're going to take a look at Curve Finance. As usual, I would like to ask you to give this video a like and a subscribe if you enjoy it by the end of this video. So let's dive right into Curve. So to learn more about this 90s looking DEX, we go to the question mark at the top. We see white paper, audits, events, contracts, anything that you could possibly imagine. Then we go to the resources, and here you'll find a wealth of information. So let's start with understanding Curve. So basically the main focus is on stablecoins. That is how it was initially launched. And then the reason why is to get the fees lower and lower slippage. So unlike traditional exchanges, the Curve protocol is completely non-custodial and it is decentralized, and it works in a similar way as Uniswap does. So we are working with liquidity pools in order to be able to facilitate the trades. Additionally, centralized exchanges tend to have high fees when you want to convert one stablecoin into another. So this is also an aspect that Curve Finance is trying to address. With their unique system, they're able to keep these costs much lower and lower slippage fees, which makes it interesting again for other external parties to use the Curve protocol. So when it comes to use cases, I do think this is not really completely focused at the retail investors. Of course, we can use the protocol to swap from DAI to USDC and so forth, but I think this is definitely the big bulk of the volume is coming from other companies. So how do we make money? Well, easy. We get some fees for each trade. So it is very important that the transaction volume on the Curve protocol is really high, because with each transaction there are fees, and these fees are then partially being given to the people who provide liquidity. Additionally, some liquidity pools are being supplied to other protocols, like for example Compound, who then lend out the money to their users. And then in return, you will get a portion of those interests earned. Next to Compound, we also see that there is a partnership with iEarn. Very important to know, iEarn, that name is no longer used. This is Yearn Finance, which you probably already know. So iEarn changed their name this year to Yearn Finance. Now, what happens if you provide liquidity to a certain pool? Well, if you go and deposit a certain coin, for example, we put DAI into the DAI USDC USDT liquidity pool, then they're going to take a look at what the need is for DAI in the liquidity pool. If there is not enough DAI in the pool, then you'll get a bonus. If there is too much DAI in the pool, then you'll pay a little fee. Then they take your DAI and then they distribute it over the different coins. When you pull it out again, then of course it all gets converted into the coin that you initially deposited. So the good news is you don't have to go and get some DAI, USDC and USDT separately, then to create a liquidity pair. No, you just deposit the DAI and then the system does this all for you. It starts distributing the value among all the other stablecoins. So that is really easy and convenient. Then when looking at interest, well, you get interest every block or every 15 seconds, so you can keep compounding those rewards very quickly. Then with our incentivized pools, well, basically, if you got some new pools, so initially it all started with a USDT, USDC and DAI pool. Right now there are a bunch more pools available, and if some pool wants to get promoted, they can give you extra bonus rewards, and this is what we call incentivized pools. So just take a look at the pool list and then see whatever is most interesting for you. In general, the higher the reward, the higher the risk. Keep that in mind. So if you want to sum it all up, Curve is basically a system to swap the different stablecoins as efficiently as possible, with as low fees as possible and with as low slippage as possible. So it must probably not come as a surprise if you open up the white paper. You'll see that the original name was StableSwap. This summer, however, there was a lot of speculation on the launch of the Curve token. Now, why is there a Curve token? Well, first of all, the Curve token is a governance token, and this was brought into existence by the launch of a DAO. If you want to know more about DAOs and how DAOs can be created, be sure to take a look at my video on Aragon. Aragon is a system that allows you to create a DAO very simply. So a DAO is a decentralized autonomous organization. This means that there is a decentralized organization which does the governance of the entire Curve project. Now, the main reason why they did this is because the SEC or anyone else can't go after a DAO because it's a decentralized organization. So we have the DAO team, then we have the developer team, and then we have the project. Basically, the project is generating income that goes into the treasury of the decentralized organization, and then that decentralized organization pays the development team, which is a regular company, and then everybody in the community can vote on how much money is being spent on marketing, on development, and so forth. So the entire project is now in the hands of the community. Now, how does the CRV token work? Well, basically, you get rewards when you provide liquidity to the system. So basically, everybody who uses the platform will get rewarded in CRV tokens, and you can then use the CRV tokens to cast your vote. This, of course, does mean that the value of the token is really hard to put your finger on, and especially in the beginning, there was a lot of speculation on it, and even some things went wrong with the initial launch. But so the most important thing to keep in mind that this token can be earned by using the platform, by providing liquidity, and so forth. But what else can we do with the CRV token except holding it in our wallet? If we stake it, in other means, if we lock it up for a certain period of time, we can use it to get extra trading fees. Then we have the boosting mechanism. So you'll see a regular annual percentage interest, and then you'll see a boosted one. So you get a maximum boost of 2.5 if you lock your CRV tokens up. And last but not least, the, of course, main reason why we have the token is for voting. So as soon as you lock up your tokens for voting, then you'll receive a CRV token that you can then use in the various proposals. Then we have a look at the tokenomics of the token. Well, it's pretty simple. The total supply is 3 billion. Thankfully, most of the tokens, of course, are going to the community. Then a big portion goes to the shareholders, which have to vest the tokens for 2 to 4 years, which is definitely a decent period. Then we have the employees, also 2 years, and then community reserve. Alright, so let's head back to the website, click on the question mark, and then we go to white paper. So here we see the Curve StableSwap white paper. Again, StableSwap was the initial name of the project, and this is the initial white paper. And then we have the Curve DAO white paper. So this is the white paper on the decentralized organization that is governing the whole project. As you can see, also the logo of Aragon. If you want to know more about Aragon, just click on the video that pops up right now. Looking at the white paper, we see the name of the man who made the white paper and started with the StableSwap project. It is a pretty technical white paper. It is not that long. You can easily read everything. If you're not that good at math, you can perfectly skip the formulas and just take a look at the explanation that is below. I guess the most important part is on page 3, where we take a look at this curve. So I took the liberty to copy paste this curve because this is the most important part of the white paper, and I put it into Paint. So this curve is the Uniswap curve. Then we have the curve, which is now called, so it used to call StableSwap, the StableSwap curve. And then we have a one-on-one conversion. So of course, when you're working with a stable coin, you want one-on-one conversion because one USDT should be one USDC, should be one USD, whatever. So the longer we can stay on this line, the better. And that is exactly what Curve is trying to do. So here we are still in a very good zone, while with Uniswap or any similar DEX protocol, we would be deviating a lot from the one-on-one conversion. So that is why Curve Finance is so interesting for stablecoins. Then when doing some more research, for example, when we use the Coin Bureau website, be sure to check out his YouTube channel. He's got some great information on there. So basically, the Curve Finance was created by the Russian physicist Michael Egorov. He has a lot of experience. He has been into Bitcoin since 2013. And then for the other members, there isn't that much information. The only thing we know is that the development team is located in Switzerland. And then they are with 5 people. So this guy is the face of the company. Then also important to know, the launch of the Curve token was definitely not without any hiccups. So basically what happened is that somebody deployed a contract on the blockchain, and then a lot of people started using it. Of course, because he deployed it so fast, he was able to mine a lot of tokens. And then at the peak of the launch, the price was of course very high, and it was worth a few millions. If he kept these tokens right now, the token price is a lot lower. But yeah, the team decided just to go with it because so many people had already signed in to the contract. So the Curve DAO token had a pretty bumpy ride. So in the beginning it was super hyped and then it stabilized. So right now there is a slow growth to the upside. I think this is the real price for the DAO token. Keep in mind this is a governance token, so personally I wouldn't buy the token, just farm it and see where it goes. I do think if big things would happen with the project, that the DAO token will also go up in value because it represents the whole project. So enough talk, let's see how this works. So first of all, we have the swapping system. This is basically the same as Uniswap and you can easily swap between different tokens. Then we have the different curve pools. So basically we have the normal APY, that's when you participate in the pool and you do nothing else. Then there is bonus APY, which can then be boosted by locking up your curve tokens for a maximum of 2.5 bonus. So that's all the numbers that you can see here. So basically you just choose the pool that you want to invest in or where you want to lock up your tokens into. I think the general guideline is the better the rewards, the higher the risk. And then when we scroll down the page, we see basically some CRV stats, which means CRV is what you get when you lock up your CRV token, and they're basically doing a bit of a promotion and trying to incentivize you to lock up your CRV tokens. So let's give this a go. We're going to take a look at the USDT pool. Click. Here you can effectively swap your tokens inside this pool, which is something we're not going to do. What we're interested in is depositing our tokens. So when you click deposit here, you can choose the tokens that you want to deposit into this contract, and then the Curve protocol divide your investment into the different stable coins in this pool. As we said earlier, you can have a bonus or you can have slippage. Right now they have enough USDT in the protocol, so I'll be paying some slippage. But if I would have invested some DAI, then I would get actually a bonus. So if I would click deposit or deposit and stake, I will get my MetaMask popping up. Then they'll ask you if I would allow Curve Finance to get access to my USDT. I would suggest to always click edit because by default it's on unlimited. I would always put a limit on the maximum a project can take out of your wallet. So in this case, let's say 1,000. Then you pay a very small fee. And then you'll see it can become very expensive. I would have to pay 16 bucks just to provide liquidity, and on my 14 bucks, my 40 bucks, that would be a bit much. So I'm going to reject this. But you get the idea. So the big difference between deposit and stake: with deposit, you will earn your portion of the transaction fees in the liquidity pool, but if you would do deposit and stake, you would actually be earning those Curve tokens. So if you want to be farming Curve tokens, you'll have to take deposit and stake. Now once we click DAO, we can find some interesting things. So first of all, we can vote with the CRV tokens that we have, or we can make use of the liquidity gulk in the pool that we are using. And then maybe more interesting is the locker, because that will give you that ultimate bonus. So locking up your tokens will be 1 week, 1 month, 3 months, 6 months, 1 year, or the maximum is 4 years. And this maximum will give you that 2.5 multiplier bonus. So the final thing I want to discuss is risk. And they made a really nice page on this. So when you click in the choose a curve pool, then you get some more information on different pools. Right now, of course, they have a whole lot more, but they sum up the different risks with each pool. Basically, the thing you see coming back is smart contract risk. So if there is a problem with the smart contract of Curve or of the underlying asset, then of course you are taking on that risk as well. And then they go over the different risks for each pool, but in essence, you always have the same risk. You could have smart contract risk. You could have, if you're not using stable coins, but you're, for example, using Bitcoin, of course, then your risk is also the price of Bitcoin going up or down. Now, one final note, I know that stable coins, because they're linked to the US dollar, we are of course thinking there is zero risk there. But for example, a risk could be if the United States would, for example, ban the use of USDT or USDC or anything that is pegged to the dollar. That could have a huge impact on those coins. DAI, for example, is completely decentralized. If there would be a problem with MakerDAO, this could impact the price of the stablecoin DAI, for example. So these are things that are very, very unlikely, but keep in mind, it is possible. So what is my final conclusion? Well, first of all, it is a nice swapping protocol. If you're holding several stablecoins, then it could be interesting to lock it up in one of these contracts. I mean, the returns are pretty nice. I would not be buying the Curve token because it's really a farm token. So I would suggest, if you are interested in the Curve token, just put up your stable coins, put them in a pool, earn some tokens, and then invest those tokens or lock them up to get those extra interests. Additionally, I'm really happy to see that they have had several audits. A lot of people are using the protocol. It is interesting that they went for a DAO, so the project is now governed completely in a decentralized way. Of course, you have to keep an eye on the balance at who has all the Curve tokens, so to make sure that is really decentralized. I mean, if somebody has the majority of the Curve tokens, then they can block or push through any change in the DAO company. But of course, the more people who are using the system, the more Curve tokens are available to the community, and the more balanced this situation will be. I'm also happy to see that they used the Aragon project for their DAO system. I'm also happy that they're using Chainlink as their oracle. This also instills confidence. And then if you see that big platforms like Compound and Yearn Finance are using the Curve liquidity pools, then I think this project has definitely got a future. Of course, none of this is financial advice. This is just my summary of the project. If you're interested in this project, be sure to do your own research. That's it for this video. If you got any questions about Curve or anything else, be sure to post a comment. If you enjoyed this video, and I think you did if you made it to the end, then be sure to give it a like, give me a subscribe. I'm still a very small channel and I can use all the support I can get. That's it, and I'll see you guys in the next video. Bye.